Gaurang Shah is here to explain to us the impact of the slumping Indian rupee. Gaurang, I want to begin with that and we will come to the market mood subsequently. Indian rupee slumping to the 91 against the dollar mark yesterday before closing slightly better. Now, again, some say that this is a chicken and egg situation. It is the foreign flows, the foreign outflows, which are leading to the rupee tanking. And some say the rupee tanking is actually expediting the exit of foreign flows. Which of the two is it?
Thank you so much for having me on the show. Morning to all your viewers. A small disclaimer before we go ahead that all recommendations that I'll be sharing with you this morning on the equity side are a part of our fundamental research team recommendation from a long-term point of view. Our company Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might hold their investment interest. So I think, look, the thing is, by this weekend or early next week, because next week, 25th, Thursday, we have the Christmas. So I think the FI stroke FPI selling that we are witnessing, which is relentlessly continuing, this is likely to possibly ease off by this weekend or early next week. Some amount of strength coming back into the rupee is something that we expect next week because of the dollar demand going down, because of the slowdown or a momentary stop in the FI stroke FPI selling. This week also, we saw RBI supply dollar when it crossed over to 90 earlier on the weakness against the dollar rupee INR. We saw at that point of time also RBI supply dollar, but it did not seems to get any kind of long-term durable strength in the INR against the dollar. So this will continue. It will have its own positive and negative impact. Positive impact on the export-oriented companies and sectors, and negative impact in terms of imports. So it's a flip-flop. By next week, we should see some amount of stability in the Indian rupee. And on the markets overall, I think it's good to see this range-bound trade. I think 25,700, 800 on the lower side, 26,000 on the higher side on the Nifty spot. I think we would possibly just pack off this year near about this range, unless and until you have some pleasant surprise from the global arena.
Okay, that pleasant surprise from the global arena is something that markets and investors, both retail, DIIs as well as FIIs, sitting on the fringe seem to be waiting for, but no concrete measures, no concrete decisions yet on the India-US trade deal. And you're mentioning the markets continue to be range-bound, but the markets are potentially expecting the deal to come through, but that deal continues to be elusive, Mr. Shah. So I want to understand, in case we continue to be in this limbo, then can we expect the markets to stay in the range of about, let's say, the 26,000 odd levels plus minus 200-300 points for, let's say, till as long as it takes for the deal to come through?
I don't think as long as it takes, Kartik, because, okay, on the deal front, I think the Honorable Minister Piyush Goyal has also made a couple of statements. Day before yesterday, Commerce Secretary made a statement. Discussion between both the countries, India and US, and their counterparts, representatives, have reached almost the final stage. Yesterday, in fact, Kartik, I was reading a report that US has agreed that they will not demand the entry into agri-stroke dairy sector, which they have been demanding, and they have agreed to that. I hope that is right, whatever I read.
Yeah.
There is no confirmed source that I can possibly name over here.
Right.
I am quite sure, Kartik, that from 10th of Jan onwards, when there will be a curtain raiser for the third quarter earning, we are possibly preparing ourselves for a decent positive Q3 earning, which will give a little bit of more stability to the market. And then after that, I think Feb, we will have the curtain raiser for the budget also. I'm sure it's going to be a growth-oriented budget with employment being focused and easing off certain policies which were redundant,
Right.
replace it by a new policy.
Right.
So Q3 earning and budget could be the trigger for market to possibly move a little bit more higher up from here on. On the deal front, my personal take, Kartik, is let it take as much time as it takes. And the fact that when the deal was not done, we made a new lifetime high on the Sensex and Nifty.
Absolutely. But, I also want to talk a minute more on the slumping Indian rupee, Mr. Shah. And this comes on the fact that it's not just against the US dollar that the Indian rupee has weakened. In fact, the Indian rupee has weakened even against the British pound, and India has an FTA with UK. It has also weakened against the Australian dollar. And we are talking, trade expansion with Australia. It has fallen the most against the euro, and the India-EU FTA potentially seems to be in a closer kissing distance than the India-US trade deal. Despite all of that, and of course, great data coming on the export front in November, India's trade deficit has sort of narrowed. Despite that, we are seeing that the Indian rupee continues to be in a tailspin.
So this is purely because of the demand, dollar demand, and I don't think there is anything great that has happened in terms of minus the FI stroke FPI selling and taking dollars back home. I don't think there is anything serious significant that the rupee has to depreciate further from these levels uh, in the near future. Yes, trade agreement talks are in virtual final stages with some countries. We are also into trade agreement or bilateral trade discussion with some of the Middle East countries. So my sense is that near-term pain, Kartik, could be there for some time. But like I mentioned, come next week, I think most of our friends from the FPI, FI category are going to go for Christmas holiday. They'll come back possibly in first weekend or second week of Jan 2026, and then they'll take it forward. So my sense, I still say the same thing that I mentioned, Kartik, that from next week onwards, we should see some amount of stability in the dollar.
All right.
I beg your pardon, in the rupee against the dollar.
In the rupee against the dollar, sure. We will wait for next week, and let's hope that that your sort of analysis of this entire situation comes true. But meanwhile, I want to discuss some sectors with you, especially the IT sector this morning, which is taking positive cues from the US market. But there are also contradictory reports which are suggesting that a lot of the FPI outflows that we are seeing in the Indian markets is actually flight of capital to AI centers, and this includes the US, this includes South Korea, this includes Taiwan. So a lot of even Asia-focused funds are parking investments in AI centers. Meanwhile, Indian IT services story continues to be a services story and not really an AI product story. How do you view, barring these aberrations that we are seeing with respect to US markets on the IT stocks, how do you see the Indian IT story poised for 2026?
So Karthik, even when President of the United States of America, Mr. Donald Trump, made the initial announcement of tariff on 180 plus countries on April 2nd, if I'm not mistaken.
Yeah.
There was a lot of
Liberation Day, as he called it,
for the Indian IT company. And large part of people in the market were telling you to stay away from Indian IT.
Right.
Because they expected a doomsday. Fast forward to the second quarter earning that we saw and the verbatim from the management in terms of the outlook of business. So as a brokerage house, we remain positive even on that particular day, 2nd of April, when the tariffs were announced. Post that, though there was a lot of negative sentiments on the Indian IT company, even now and going into the future. So we have investment ideas across small cap, mid cap, large cap IT companies, Karthik. And my sense is that though there is this, a new AI bubble or a doom kind of a scenario, I think Indian IT is still a little bit more insulated with respect to the kind of advanced stage that American and Chinese companies are in. And valuations have run up to a great extent. Earnings still remains a challenge to get delivered. And if they don't get delivered, Karthik, the earnings, then I think we should prepare some amount of steep correction in the US stroke Chinese AI related companies.
So that rebalance could potentially be in the making, but a lot depends on the earnings. Now, earnings in Q3, Mr. Shah, are expected to, at least on the back of the rise in demand that we saw owing to GST cuts, Q3 is likely to spring up a good number. But are there concerns around Q4 owing to the fact that there could be inflation, especially inflation in electronics? And there were reports that ACs and fridges and television sets could become a little more expensive come Jan. So is inflation going to be potentially a worry for Q4 numbers as we get into Jan?
Karthik, look, just before summer, that is end of March, end of Feb and early stages of March, we'll have the onset of summer. And like we've been witnessing, summers are getting hotter and hotter. Demand for high-end consumer durable goods are not only limited now to metros, Tier 1, Tier 2, Tier 3 cities, Kartik, but the major part of the demand is going to come in from semi-urban and rural India, and that's where the aspirations are going up. Earlier, fan and coolers were a luxury over there, but
Yeah,
now they
ACs
have
are mainstay.
graduated. So my sense is that earnings have, income levels, I beg your pardon, have gone up because of good monsoon and good agri output.
Yeah.
Direct cash transfer benefit has its own positive impact. A marginal increase for an AC or a high-end consumer durable appliances is not going to deter the end consumer wanting to spend.
Yeah.
So I think one should take it in its stride, and I don't think that inflation and high prices could be a spoilsport for demand.
All right, Mr. Shah, let's leave it at that. Pleasure having you here with us on News 9. As always, thank you for your input.